The reason why I choose to analyze the chart of Meta, Facebook, is that here we are dealing with an asset that is underperforming other tech stocks and the overall technology sector. So it's not a stock that I would choose to hold or buy, but rather to use it as a ground to plan risk scenarios for the broader indices, especially the Nasdaq. The way this stock has been falling out of favor and the way it has been damaging its entire technical price structure makes a valuable lesson in analyzing gaps, analyzing downside price accelerations, and measuring the potential magnitude of a bear market. How far can we fall in the Nasdaq, for instance, if we start seeing what already happened in the chart of Meta? Let's get it. So the most intriguing price action that we see here in recent times and in Meta is this gapping down here that happened in February. The market was trading by then here perched to this downtrend line here from the all-time highs. The market peaked, the Nasdaq, the overall market peaked slightly later on. So, but the price of Meta already started here falling alongside a line that we have been identifying here in the past several times, a line that once broken in most of the times, if it is established as a resistance, in most of the times it led to a continuation. This is a line that we can go all the way down here to the beginnings, and we saw this huge gap here in acceleration. And along the way, we could just drag and drop this line several times to several instances here where we have a little bit of a correction, base building, and then breakout to the upside and continuation. The same happened here, and the same happened also back here, for instance, in 2014. So this was the line with this little breakout here, pullback and continuation. So it was expected by price trading here glued to this resistance line that the market would at least try to break above these levels, try to reach the nominal 390 level, more or less, where the all-time high was, and then finally trying to reach the continuation diagonal, the dynamic diagonal resistance from the all-time high, and continue to trade alongside this upward sloping channel here on the log scale, at least on the same price band as it was been trading in recent years. We can see that it was trading stronger here on the upside of the channel between 2014 until the collapse of 2018, but at least it was expected the market continued trading higher here. Before continuing to listen to the video, consider dropping a like and subscribe to the channel if you're yet to do so. Thanks for watching my videos. But at this moment, we had a crash in the price, and the market crashed down here, gapping down to the very same support. And this support corresponds here in the chart of Meta to the support measured here after the crash of the lockdown-induced crash in 2020. And if we follow that line back here on a log scale, we can find that it corresponds here to this swing lows in the beginning here of trading of Facebook. So this was an important historical support for Meta. We gapped down to these levels. If we compare this structure, jumping now to a Nasdaq, in this case, an arithmetic chart, we see that this support that corresponds here to a ascending line based on this the very same 2020 March lows, and also the December 18 lows. In this case, we have a continuous line here, upward sloping. We are still far from reaching that level. And also in this case, these two instances here with these two aforementioned crash, they build up this dynamic support, something that in Meta we don't see. In Meta we don't have, well, we could eventually trace a line based on these two supports and would lead us somewhere here. We see some price correspondence in the way the market acted with this line, but it's just too flat here to look at it from a daily perspective. So we prefer to go with with a more inclination lines here, at least on the daily chart. And we see that this plunge in 2020 went a little bit further than the what would be the continuation if we had, for instance, here this support. It went a little bit further and established a new support line. So this was already a sign of weakness here in March 2020. And interestingly enough, this entire period since the highs here in 2018 until the all-time highs and last year, all this period, in fact, the stock of Meta underperformed the Nasdaq. We will see in a minute the ratio chart for us to understand this later part of the history of Meta. But right now, let's focus on what happened here after this gapping down to support. The price continued trading below this support, retested it from below, and it started immediately trading lower. Now, when this happens, and this is the interesting part of the exercise, is something that we want to use and infer this scenario in a potential bear market in the Nasdaq, is if we lose this support like this, that in the Nasdaq corresponds to this one, but we could eventually try to figure out what could happen if we lose after now we lost these ascending support lines. So what is happening here in the chart of Meta is that once we lose an important historical dynamic support, in this case, immediately as an analyst, what we do is we follow the line to the last contact point of that line, or the origin of the line if we don't have several contact points, and then we establish the horizontal support from there, because once broken, the market will probably try to reach the horizontal support. In this case, if it would be an upside breakout, it would be resistance. It would try to reach that nominal level moving forward, and this is what happened. It reached this same level here not long ago, last month, and because the second near low here from 2018 was very close to it, immediately gapped down to it. Reacted a little bit to the upside, became here a little bit imprisoned in this range, but then it continued gapping and accelerating to the downside. Why this happens is once the horizontal level is not enough as a target, immediately what the price tries to reach is any dynamic, in this case, descending line that goes through the very same point that corresponds to the lost level at these upper levels here. So once we lose the ascending support, we try first to reach the horizontal, and then the market will tentatively try to reach the diagonal descending line that right now corresponds here to the $45 more or less. Okay, so why this line is also an important support here in the chart of Meta, and the reason is because if we go back here and trace other horizontal levels here from significant swing lows or breakouts and pullbacks in the past, we have an horizontal here, a horizontal price level corresponding to the 73, 74 level, corresponding here to the lows in August 2015. And this line intersects with this descending line at the very top here, at the very all-time high here in Meta. So this makes me think that this intersection, because it was a significant intersection in terms of time, it increases the significance of any lines that go through that level. And let's do here a spontaneous spontaneous exercise. If we, for instance, if we look to other levels here, let's say I take this line and I move it a little bit further, okay, to any significant high, can I find intersections, other intersections that correspond to this all-time high here with other lines, and that later on provide me some clue as a target or an acceleration point? And the answer is clearly yes. We have another intersection here between these lows here in 2018. This descending line becomes important because it is correspondent here between the all-time high and the line itself, and we see the market it went all the way down and targeted precisely this level, and not only it targeted this level, but it used this level to accelerate further, because these intersections, they can give us time points where the market can stage something important, some change in its structure, and this can be a reaction, it can be an outright reversal and continuation of a trend, but it can be also a breakout, a breakdown and continuation, but also an acceleration gap as a continuation gap. In this case, we had this continuation gap to the downside here. So this line becomes now important. This line is now lost and cleared. We are trading down here, and nothing emerges down the way to hold this, to offer some support here. We have this horizontal support. The intersection with this support was already done. So in terms of time, so my assumption here is that we will probably accelerate all the way down here to the $44-45 here, corresponding to these lows here, to this breakout and pullback here seen in 2013. Now, if we go on the Nasdaq and go all the way back to 2013, that will be a huge collapse in the price of the index. We are still far from there, but all the lessons that we see in the price of Meta, we can eventually extract some of these clues and start inferring how far could we fall in the Nasdaq if those important lines are lost. Although here we have a descending resistance that was slightly broken here back in summer this year, but the price quickly returned and continued down, and we lost this ascending support corresponding to these June lows here that offered some kind of hope for the near future, but that was also cleared here. We tested it from the lower side. That's where we are right now after testing it as a resistance. We are hitting lower, so we have still room on the downside here to find this important horizontal support corresponding to the all-time highs here before the 2020 crash on a horizontal basis, but more probabilities of a target to the downside are offered by this intersection of this downward sloping channel here, the channel support intersecting with this ascending channel support by December. So we could have still another leg down, technically speaking, although I think that a lot of things that are happening right now, such as interest rate decisions, we had one recently, they're pretty much backed in the cake right now. A lot of things that are happening in the indices are already priced in. We're already seeing here a loss of almost 40% in the Nasdaq. So could we have another leg down? Yes, we could. But most of these forward-looking scenarios are pretty much priced in the index. But we have still some issues here. Some stocks in the index that are dragging down the index as a whole, and this is one of them. We could still see a lot of price from price downside potential here. If we analyze the relative strength of Facebook or Meta in comparison to the overall index, we see this outperformance from its beginnings till that high here in mid 2017, which corresponds to all this period where Facebook traded here close to the upper borders of its logarithmic channel. And once it lost here a little bit earlier, perhaps a little bit like here, August 2017, from here on, it lost then in comparative performance, and the Nasdaq started to outperform the stock. And here we see several lows here, these interesting lows. We have the first one here in by the end of 2018. We have seen this on the other chart as well. And then this March 2020, we see how in the ratio chart, this is the ratio between, as I said, Meta and the Nasdaq. We had this swing low right to this very same level here of November 18, while in the stock we had this slightly higher high here, slightly higher high, and in the chart of the Nasdaq, it was even higher. But in the ratio chart, we see that this was a level that we bumped a third time again in February 2021, and then we lost this year, beginning of the year, we lost that level, and we start accelerating down. We've seen a huge accelerating last week with a very negative week, so the stock really underperformed the index in a very clear manner, and probably there is still some room here in the ratio chart to go back to all these levels here of 2013. So clearly, if we are looking this on a log chart, if you look at arithmetically, it's basically the same. We are already there arithmetically at the 2013 level. So this is a level where we probably would then look for some consolidation. So I'm expecting the market to gap down here, to continue accelerating in a furious manner here towards the $45, and then eventually to continue here with these downward sloping channels within these channels or even below to find its new range here around the $25-30 range here, somewhere here. So it's not a stock that I will touch right now. I hope you liked the video. We got some clues about how to analyze these lines, how to extrapolate their importance based on past price action corresponding to key moments in the historical chart, and seeing from those lines how far we can go moving into the future, or how low we can drop in the case of a bear market and get there by some nice targets. In the next video, we may, or in a future video, we may analyze the Nasdaq and major indices in a much more detail. I will not do it today because I don't see a lot of danger right now happening here. I just wanted to point out the chart of Meta and use it as a ground to prepare eventually for such a risk scenario or such a dark potential future in the overall market in the next weeks and next month. Thanks for your attention, for your time. Keep in touch. Bye for now.